So about 2% for the Nifty and the Sensex. The Nifty bank probably more so. And the mid caps and the small caps probably more so as well. So the broader markets also didn't have a great day, nor did they have a great week either. 2.25% for the small cap index. That's not something that is easy to take. HCL Tech is not present on the Sensex and therefore it will not be amongst the top gainers list, but Adani Ports having some gains. They're about 1.8% and some gains to Infosys. So IT selectively is done okay, but look at the list of losers. Banks all the way. Axis, yes. ICICI, SBI amongst the top losers. There is weakness within the Tata Steel and Tata Motors. Also the Tamo twins, so Tata Motors and Tata Motors DBR, both of them have looked weak. Reliance has looked slightly wobbly today, but it's banks all the way, frankly. Even Kotak and HDFC Bank participating. I think if you look at the list of the top contributors on the index today, you will probably find banks being the center out there. Commodities stocks have fallen, but they are not heavyweights. So the Vedantas and the Hindalcos, maybe a Vedanta will, but a Tata Steel Hindalco may not necessarily feature in the list of the top contributors, but certainly amongst the weaker names. And dare I say that the bloodbath, if I can use that term, has been even stronger or even bigger at the broader end of the spectrum. The mid caps and the small caps have had deeper gashes.
Right, Neeraj, the mid-cap index for the week is down nearly 4%. So definitely the correction was deeper and sharper for the broader market. Let me just highlight a few stocks from today's session. Uttam Sugar has been down this week and we've seen consistent selling pressure in the last few sessions for this counter. So that's closing the day with cuts of nearly 11%. ADF Foods, if you remember, the counter was down 8 to 9% yesterday. So second straight day of very aggressive selling coming in for this counter. Fortis Healthcare and F&O counter, where once again it became active in the last hour of trade and some shorting was seen for this one, Fortis Healthcare, so watch out for that. The steel pack or the metals pack to say was in focus. Nifty Metals Index was one of the top sectoral losers. So stocks like Steel Authority, Jindal Steel and Power, remember these two are the stocks which were outperforming the space in the last few months, came under pressure. The other pocket which was under pressure was the PSU banking space. So stocks like Punjab National Bank, Union Bank and Syndicate Bank, all of them saw cuts of between 3 to 7 to 8%. Union Bank actually was down nearly 8.5% after that scam was unearned. But REC, which bounced back from its 52-week low, once again succumbed to selling pressure in today's session. So that also saw cuts of over 2%. Just few stocks which managed to gain from the media pack. Shamaru Entertainment went up in the last hour or last half an hour of trade, and Dish TV inching very higher in today's session. Watch out for this counter on Monday. And the other one to bounce back, where some bit of short covering rally was seen, was HCC, a counter which was down 16% yesterday, managed to close in the green with gains of 4.5%.
So all in all, at close, we have, well, not a pretty picture. Almost all indices down. By the way, just before, okay, let's first look at the statistics for today, then the week, and then we'll talk about what the world markets are doing right now. So 9988 for the index. The contributors will come up on the screen. The market breadth will come up on your screen. Firstly, the contributors. All banks and the Reliance Industries are heavyweight here. So naturally, the commodity names are not featuring because even they've fallen more. Their weightage isn't the best. And amongst the gainers, IT probably trying its little bit. So HCL Tech, by virtue of the 3% gain, is the top contributor. Their Infosys is marginal. So, but as you can see, the difference between the gainers and the losers shows you there's hardly any stock in the index, at least, which tried to pull its hand up and do something dominated by losers. We're interested in seeing. This was on anticipated lines. A small bit of a dip towards the end doesn't matter, but the volumes would be the interesting one. And let's see the cash market volumes in today's session. Picked up a little bit. Actually, even the F&O volumes are not too less, considering it's not a weekly expiry.
That's right, Neeraj. It's way above the average. Usually, average volume would be somewhere about 5 to 5.5 lakh shares. So definitely the trading activity heightened on a day like this when we breached the 10,000 mark. And even for cash, which was somewhere about 26, 27 throughout the week, is almost 32 to 32,500 today.
Yeah, in the morning I was of the opinion that flows to India, whatever little flows coming in, would probably take a bit of a step back because it's a bit of an unknown territory as to what's happening on the global arena. I'm very interested in seeing what the FI number is in the session today. The DI number too, but the FI number more importantly, very, very crucial in the session today. Now, the weekly performance. And again, you will see that commodities and banks, PSU banks have just taken a turn for the worse. We're just showing the Nifty out here, but if you look at the mid-cap index too, it'll show that. But banks and commodities all through, though even the OMCs are featuring Navneet. But last week we were talking about how some of the PSU banks made a bit of a comeback as well. This week, all of them have been bludgeoned out of shape. Starting from the large caps, SBI out here on the list, 7%. To the central banks, Canada banks, everything has been beaten out of shape.
Right, and two stocks which have actually dragged the index lower this week, I guess, would be State Bank of India and ICICI Bank, both being heavyweights. And I think the bounce back that one was seeing for the PSU banking space was just a dead cat bounce, because on every rally they're coming under pressure.
Yeah, they are. They certainly are under pressure. And lastly, look at the Dow futures before we get back to our guests. The Dow futures are now at the lowest point that they have been in the last couple of hours of trade. 212 points, so almost 1% off for the Dow now. When we started the show, it was 1/3%, or it's less than 0.5%. It's now close to 1% lower. This may change, but things aren't looking pretty on the global front yet again. And if this continues, then expect the same thing on Monday as well. Final thoughts really. Deepak, would the extent okay, I think we've just lost the snag with Deepak, but the same question to Sarvendra really. Sarvendra, while your charts may be showing, and as I heard you mention at the start of the show, that now you'll not be aggressively short, and at 9,700 or closer to those levels, you'll probably take some of the money off the table. But I don't know, since you track long dated charts, do you look at the charts of the global markets, the Dow maybe, and what is that chart indicating? Have you looked at that?
Oh, absolutely. We always look at international markets on a daily basis. And if you remember last time we were there, last Friday, off air, we were discussing that how Dow could probably fall under 2,000, 3,000 points. So 700 out of that has already gone, and probably 2 days fall of 200 points in between. So overall, I think 1,000 points has gone, another 1,500 to 2,000 points pending on the Dow Jones, which means you would be reaching close to 22,000 on the Dow Jones. And if that is the case, I think that why will we stop here? And that is my concern. So we might undershoot our target, which we initially had at 9,700. We might undershoot it by 100, 200 points in the first leg. So that is definitely possible. But as I said, when we are discussing, as a matter of discipline, if you've taken some targets and if you've taken those trades, you would at those levels, you would try and book out some profits and stay light. By no means we will be covering all shorts, but yeah, 20-30% short, 30% shorts can always remain till you clearly see a bottom coming into place. Now at today's weekly close, what has happened is that on a larger pattern today, we have broken down into a gap for both the Nifty and the Bank Nifty, and we have stayed low. So as long as this gap is not getting filled, and probably the recent swing highs, so which means I think 10,250 odd on the Nifty and around 24,500 on the Bank Nifty. These are numbers now absolutely sacrosanct. Till you don't cross these numbers, there's no way that this market will recover. So, and if global markets were to sell off more, which I still firmly believe that they will, I think you could add more pain on the downside. So, anybody who's slightly aggressive could trail stop losses and stand. So that is one way of doing it, and that is where we recommend on the Nifty call. I must take those levels also. For anybody wanting to hold that trade from 11,100. Now your stop losses, which were earlier last week, my stop losses, trailed stop losses were at 10,633. Now those stop losses have been aggressively trailed, which means we have trailed them almost close to 4%. And we are saying that now we want to keep that stop loss at 10,256.60. So the moment we cross that number on a daily closing basis, first thing is that you will be zero shorts. You will cover all your shorts if at all. If that number comes first and 9,700 comes later on, then at 10,256, which is a trailing stop loss on a closing basis, you will cover all shorts. Anybody who's initiate shorts on my trades and me for my clients and on trades, we will definitely cover all those shorts and will be zero short then. But I see a lower possibility of that happening, that we would not go back to 10,256.60 on a closing basis on Nifty and first go to 97. So that could be happening as soon as day after on Monday, Tuesday, because if we gap down, Monday also if we gap down along with the Dow, if Dow again tanks today 500, 600 points, then who knows, by Monday only you will be at 9,700.
Thanks a lot, Sarvendra, for joining us today and taking us through your technical views on the market.